Hello everyone and welcome to my morning report analysis videos on Tuesday the 9th of October with me, Richard Perry, market analyst at Hantec Markets. We have a fairly mixed outlook on market sentiment today, but it's taking a little bit of a negative turn as the European session has really started to get going. The dollar is starting to strengthen again, and that's coming as Treasury yields are picking up once more. The 10-year actually hit 3.25% today, so that continues to climb, and whilst that continues to climb, tends to be the case that risk appetite is retracing or certainly going lower. And you can see that, interestingly, equity markets are fairly sort of mixed to flat, nothing real in terms of direction there, and that came as Wall Street markets actually rallied quite positively into the close from the day lows, but futures are actually slightly lower. So you've got these mixed sense to equity markets today, but there is, as the European session has started to sort of generate, we're seeing this increasing move towards the dollar, towards the yen. Both of these are considered safe haven currencies in recent times, and certainly that is helping to just maintain this air of negativity that we have around markets. You sort of still have to focus on the fact that Italian bond yields are climbing. The Italian 10-year back above 3.6% today, and yield spreads of Italian over German debt continue to blow out. Show you this. I can't quite get it in. That continues to move out 3.6% on the 10-year and over 300 basis points, 305 basis points now as the spread over German debt. So that is a continued concern, and that would suggest that the euro will remain under pressure in that environment, and subsequently the dollar fairly strong. So we're still seeing this playing out in markets today. Now, there's no data out today. Again, a second day of very little data. Sorry, that's the wrong table. Very little data to affect markets today as we sort of start to look out towards the US inflation data later on in the week. You've got PPI tomorrow, CPI on Thursday. Those are both going to be really watched, certainly by the bond markets. And so subsequently, we are fairly well set actually in terms of market sentiment, I think, today, and still looks fairly negative. Now my chart today is Aussie dollar. Now this is interesting because the Aussie dollar actually does tend to be seen as a risk appetite indicator. However, what we saw yesterday was the Aussie dollar picking up, and today, despite the fact that we're seeing this continued dollar strength, these commodity currencies are not really being sold off. Now let me show you the Aussie in terms of, where is it? Here on the Aussie, down 6 pips on the Aussie. The Kiwi also not negative, and that's interesting because the commodities themselves are actually finding support today. So subsequently we're seeing the Aussie dollar, which is holding on to a bit of support. Now the sort of lends the question whether this improvement in the Aussie yesterday is the beginnings of a technical rally, because what you've seen previously is whenever this RSI gets towards 30, and it was at 31 on Friday before the unwinding move, when it starts to unwind, it starts to generate some support. Now sometimes this turns into just a period of consolidation, as we saw through June, but also sometimes it results in a technical rally. And you can see that technical rally really did sort of generate through May. There was a slight positive divergence, perhaps you could argue, that did help facilitate that rally. But we have seen previously where those moves have taken off, that the market then sort of comes back towards that old long-term downtrend that we've been in since January. So you could either see that coming through a consolidation or a technical rally. So it'll be interesting to see if that is the case once more with this RSI just ticking up from 30. The stochastics also starting to bottom out. The last time we saw these sort of situations start to take hold, we did see that rally in September. We did see a rally in August. So yeah, there could be something in this move on the Aussie. Now I'm looking at 71 big figure. 70.97 was I suppose, to the pip, that reaction high on Thursday last week. And if you see a break above that, that arguably completes a small base pattern. But you can see these positive divergences going through the RSI on the hourly and MACD hourly with the recent lows of the Aussie. So there could be the potential for this to be a turnaround story near term. Now you'd be looking out for probably an unwinding move towards 72 big figure, which if I get the crosshair on here, it takes you around this area here, which is probably that would be the move back towards the downtrend, 72 big figure, which as I said is old low there, but also a pivot basis from the August low. So that would be an interesting recovery target if it were to take off. So above 71 figure, I think that would lend to 72 figure, and that would be the recovery that you'd be on the lookout for. So how does the market now react to the sort of rolling over this morning? Does it now start to break that reaction low overnight, 70.63, and then retest the 70.40 level of lows in the last couple of sessions? That would be the question. But there is something potentially in this recovery. So I wish you good luck in your trading today, and I will speak to you later.